I recently called out Novocure as one of my top 5 favorite growth stocks for 2022. Why? Here's everything you need to know about the business. My name is Brian Feroldi.
And my name is Brian Stoffel.
Thanks to StockCard.io for sponsoring today's video.
Brian, Novocure is a $7 billion company that trades under the ticker symbol NVCR. The company's mission statement is to extend survival in some of the most aggressive forms of cancer by developing and commercializing innovative therapy. That's a mouthful, but it's also an inspirational mission.
Novocure is a medical device company that is focused on fighting cancer, specifically tumorous cancer cells. The company's founders discovered more than 20 years ago that electric fields can be used to target and kill cancerous tumors. Almost sounds like magic when you first learn about it. You wear this device called Optune on your head, and it emits electric fields. Those electric fields go to work disrupting cell division only in cancerous tumors. Importantly, this technology has already been FDA approved for 2 different conditions: glioblastoma multiforme, which is brain cancer, and mesothelioma, which is cancer of the internal organ tissues. Now, this might sound like magical experimental technology, but it's on the market. Patients have been using this for years, and it's widely reimbursed, including by Medicare. So this technology actually works.
The 2 key things to know about Novocure's business model is that it functions as a direct-to-patient model, and the company is paid on a per-patient, per-month basis.
Because of that, a key metric that affects this company's financials is what's called global active patients. This is the number of active patients that are using the company's technology. We want to see this number continue to go up and to the right, which it has for many years.
Now, because this is a relatively new technology, the customer acquisition costs can be high as the company tells others what its technology can do.
However, once it finds those customers, their spending is nearly recession-proof, and 100% of the company's revenue is recurring in nature.
Now, Novocure does benefit somewhat from high switching costs. That's because these devices have been shown to slow the growth of cancer, but only while they're being used. Once a patient starts using it, the switching costs become very high to stop using it.
And while the company's brand name might not be all that well known, this company benefits from FDA approval, and it has a number of patents that protect its technology from competitors.
Now, we gave Novocure high marks for counter positioning, but this one is worth explaining. The company's technology cannot and should not be used to replace chemotherapy, radiation, or surgery. But the fact that it doesn't compete with these, we think actually adds a moat around the business because it's complementary.
And we think Novocure's moat is widening as the number of patients around the world that use this technology continues to grow.
Now, looking at Novocure's top line growth, it's been relatively impressive at a 29% annualized clip. It's worth noting, however, that growth has recently slowed down.
One of the reasons I personally love looking at medical device companies is they typically tend to be high margin. That's definitely the case here, as Novocure's gross margin is over 79%.
Novocure has shown that it can be net income profitable. However, it has made the decision to invest in its future and therefore has lost money on a GAAP basis over the last 12 months. However, its free cash flow hoard has been growing.
The company's balance sheet is in decent shape with almost twice as much cash as there is debt.
And because of that reinvestment, its returns on capital are currently negative.
Novocure was founded more than 20 years ago by Dr. Yoram Palti. He has since retired from the company's board.
However, it's worth noting that Asif Danziger, the current CEO, has been at the helm pretty much since the start, and he's been there for 20 years in that role.
The company's Glassdoor ratings are pretty good, and they have been improving in recent years.
The company's insider ownership took a hit when Palti retired from the board. However, it's still at 4.6%, which is about $320 million at the time of this recording.
Now, if there was one and only one reason to invest in Novocure, it would be because of the company's optionality. The company has been investing aggressively into its pipeline in order to take its technology and move into new types of cancer. This slide is a little bit old, but it shows the enormous potential ahead of Novocure if it can successfully move into other types of cancer. On the near-term horizon are brain metastases and lung cancer, which have vastly larger patient populations than the company's current indication.
Now, as we already talked about, the company has chosen to be net income negative while it invests in its future, meaning it's in the red. However, we believe there's tons of room for operating leverage moving forward.
Pegging down the company's total addressable market opportunity is tricky. Some estimates we see suggest it's around $13 billion, of which it's captured about 4%. However, that number will grow substantially if Novocure can win FDA approval in those additional indications.
And the revenue growth here is largely organic. It's taking a new and proven technology and applying it to new cancers.
Novocure stock has been a great investment ever since it came public, and it has thumped the market over the last 5 years. And that's despite regularly missing Wall Street's estimates.
And given the fact that Novocure is in the growth stage, it's not surprising to see that the company is not returning money to shareholders in any form.
Believe it or not, but Novocure is literally the only company on the planet that is focused on commercializing tumor treating fields. In that sense, the competition is essentially irrelevant.
Dilution is not super high, but it's something to be aware of because the company is using stock-based compensation to bring on and retain key employees.
We think the risk of Novocure being disrupted is very low, and if it was disrupted, that likely meant that cancer was cured, which is a disruption that I would be perfectly happy to take on.
If you're not someone who's worked in the medical field like myself, understanding what the company does can be somewhat difficult.
If I had to boil down Novocure's risk to one thing, it would be FDA approval. This is very much going to trade like a biotech stock. If it wins FDA approval, the stock should soar. If it does not win FDA approval, the stock should sink. I think the odds are favorable, but that is definitely the number one risk for investors to watch.
And Brian, the market largely agrees with you. It believes that it will gain FDA approval. One way that we know that is that the stock is valued at over 12 times sales and over 60 times free cash flow.
So what should investors watch moving forward? The number one thing is the company's pipeline. A bet on Novocure is a bet on its pipeline first and foremost. If it wins FDA approval, the stock's going to soar. If it does not, look out below.
Second, once it does win that approval, we need to see that new customers are using the product.
And while we wait for that to happen, the company's net income is likely to remain in net loss territory as it funds its late-stage pipeline. This number is going to bounce around, but eventually we want to see profits moving in one direction, up. So how did Novocure score on our investing checklists? For me, this company got a 74. That number used to be higher. However, more recently, this company has been missing Wall Street's estimates.
And on my framework, this got a 9.5, which is in my investable range and is a very good score for a company that's this small and heavily reliant on FDA approval for its future.
All right, Brian, both of our checklists give this company the thumbs up, so it's time to hold ourselves accountable. To do so, we're going to head on over to stockcard.io and put this company into both of our thumbs up portfolios. For you, that's called the anti-fragile portfolio. So I'm going to scroll down to new orders. I'm going to type in the company's ticker, which is NVCR. I'm going to do a buy decision. Today's date is Monday, January 24th, 2022. It's a $63 stock, so we're going to be buying about 16 shares. And the score for you was 8.5. I'm going to do submit. Then I'm going to head over to my portfolio, which is the Brian Feroldi quality checklist, and I'm going to do the exact same thing.
And while Brian does that, we want to remind folks that you can come over to stockcard.io and enter our Beat the Brians contest. This is where you pick 5 stocks that you think will perform the best in 2022, and your goal is to beat us. Currently, there are over 425 people in this contest, and the winner will get a $1,000 cash prize. And with the market going down, now is a great time to enter.
Overall, I think that Novocure is a fascinating business, but this is definitely one of the higher risk stocks in my portfolio. Brian's out.